I've got the top 3 tips you need to know before buying a condo right after this. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And as you saw in the intro, we are going to talk about condos today. Now, before we jump into condos, I want to make sure and populate the average 30-year fix according to Freddie Mac. You can also see the link below down in the description to be able to see that weekly trend. They've got a great chart that you can kind of check out where interest rates have been going. While you're down there, I'd be forever grateful. Click that like button, click that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, we're going to talk about condos. Have you ever had a bad experience in a condo? If you are watching this video, have you ever had a special assessment? Have you heard any of these things? I want you to comment below, good, bad, or indifferent. Put those comments below of what you have seen when it comes to condominiums and or some, like I said, good, bad, or indifferent stories. Now, my top 3 tips, and I've got them right here behind me, but number 1, understanding the condo rules. Not that you have to go through line by line, but can you rent it? You know, can a family member take over? Does it seem super restrictive? You want to be reading through the actual rules of the condominium association. You get those by either asking your real estate agent to source them from the other side, or once you go under contract, you can go under contract without necessarily, you can put up a small amount of earnest money. You're going to get all the condo documents, and if there's something in there that is a deal breaker, you can get your earnest money back and then, push forward. So there's very, very few cases where you're putting money up and you're not getting it back. So you can look through that condominium association minutes. You can look through the health of the association, which is going to be tip number 2. I just preempted myself there. But number 1, understanding the condo rules. That is significance behind what happens in a couple years if you want to move out and put a renter in. You really need to understand what that's going to look like, right? So, number 2, and I already stole it there, but you want to assess the financial health of the building, right? You want to understand how much is in reserves, how much is coming in, are they running a tight ship in terms of, are they budgeting the right amounts? When you look into the meeting minutes, here's a tip for you. Just get it into a Word document or PDF and Control F and look for words like special assessment, deferred maintenance, planned projects, things like that. So that way you know if there are things coming up. Now, it's not that you wouldn't necessarily want to buy it, but then you have, you're making an educated decision. You're making an informed decision based on a potential for something in the future. I have a very personal story here in that bought a condominium, and during the inspection period, the inspector walked out to the deck and said, hey, just want to let you know this deck is not up to code anymore. They changed code like last year, and if you had a building inspector see this deck, which isn't visible from the street, it's kind of blocked by some trees and whatnot, from the alley, like this could get expensive for the association, and you could expect a special assessment. I said, oh, interesting. Okay, how much do you think? And he's like, this would cost X amount of dollars. There's this many units, so you should probably plan to be like $2 to $3 grand if they had to redo this all for each unit. And I was like, okay, interesting. 2 years later, guess what? We had to have a building inspector go up to the roof of the association. I happened to be knew someone on the association board, and guess what? We got hit with a special assessment. We had to redo the deck, and there goes, I want to say like $2,800. He was exactly right. So again, I was willing to move forward. I knew that could potentially come up. Absolutely fine. I was okay with it. The deck looked great after. They even redid some stuff. Like, it was beautiful. But understanding what could come up, understanding the financial health, understanding if there's any deferred maintenance. You're going to see all these things in the meeting minutes. So don't just, in Illinois, we have attorneys. We have a ton of condos in Chicago, so that's one of those things that is significant to our market, is the condo market. But even if you're thinking about buying a second home in a vacation spot, or condo in Florida, whatever it may be, these are the significant pieces that you want to be looking at. And then number 3, and I got a little bonus tip for you here too, but number 3, think about the resale. Like, are you next to a school, a hospital, a resort area, whatever it may be, right? Because you want to be able to potentially rent it, sell it, blah, blah, blah down the road. So don't just think about getting into it right now. It's right by work. Like, hey, what if there's a bunch of extra units that are for sale. You want to be able to have a desired, buyer pool, because condos typically have a smaller buyer pool. So then if you shrink it down even more, you could lose your resaleability. So just something to consider there as well. And then the last tip for you, and this is just coming from me as a lender, right? So seeing condos all the time, I see problems. I see things like a special assessment. It shouldn't get you scared, right? You need to know what it's for and then evaluate it with your team. I just took over a deal literally this week, actually 2 deals this week that had a special assessment in the building. And guess what? Some other lender said no. We said yes. We're still able to give a good rate. I said, but this could affect your resaleability. As long as this does get done in the next year, then you should be absolutely fine. Everybody make an informed decision, and off we go, right? But just understanding from a lending perspective is that, what options do I have? It could be a little bit different, going into a condo if there is anything kind of quote unquote wrong or something like that. And then as well, if you don't have 25% down, it's a big down payment, 25%, you're going to likely see a higher interest rate. Condos carry a higher interest rate. If you're putting 20% down on the condo, then you absolutely want to be asking your lender, what's the rate if I did 25% down or 15% down? Because there is a significant adjustment at that 25% down and significantly more, right? So if you're only putting 5 or 10% down, it's absolutely going to be higher than the average 30-year fix that I was just talking about before. So just something to understand. There's just higher risk with a condo. So condo, then a townhouse, then a single family home. So thank you so much for tuning in. If you made it this far, please click that subscribe button. It's absolutely free if you enjoy the content. Again, putting out weekly videos on the channel, and I'd love to hear your comments on condos before. Happy to answer any questions that you may have out there. So have a great day, stay safe, and we'll see each other again very, very soon.